Well, good morning, everyone. Welcome to our Friday morning trading session. Hang on a second here. I'll get the screen share going on. All right. Okay. So we're looking at the NASDAQ here. We'll just take a quick look at what's been going on through the remainder of yesterday's session and the overnight. The market relatively sideways. We saw prices tail off early yesterday, recover a little bit before we called it a day. They went sideways through the afternoon and then a substantial rally going into the close. And here we are pretty much taking over from where we left off. Now this is pretty interesting. Trade Manager says we're going to be in trend mode for just over 4 hours. We'll see how that plays out. Essentially the whole session in a trend type of environment. Wouldn't that be nice? So prices bouncing off of yesterday's highs to start. So the overnight topped out at 58.96. And that's pretty much where yesterday's overnight high was as well. So the market's just opened. We'll give it a moment here to settle in. We've got, I'm also watching the euro dollar. That would be the euro US dollar pair for those of you watching the Forex. And crude oil. Crude oil seems to be a little quiet at the moment, going a little bit sideways. You can see here on our Hawk scalper, we've got a whole bunch of yellow bars, all these yellow bars clustering, printing at more or less the same price level. It's kind of suggestive of a sideways market. So I'm not going to be too quick to jump on anything. Here on the Raptor, you can see we've produced our counter trend signal. That's the soft edge sell, the number 2 signal. Getting a little bit of a bounce. Yes, Ron's made the comment, the volume is higher on the September contract. We are getting into that rollover period. The contract actually doesn't expire until toward the end of next week. Here, let me just pull something up here for you. Okay, so here is a comparison between the June contract, which is trading at 34,000 contracts, versus September trading at 38,000. So it's true the volume is slightly higher on September, but look at the open interest. The open interest on June is still much higher than what it is on September. Now, it's not a big deal if you're trading September. That's fine. Likewise, it's fine if you're trading June. You don't need to worry too much. Okay, it looks like prices may just try to dip a little bit lower here. We're into the hard edge on the Eagle, as well as the Raptor, as well as the median line here on our support and resistance suite. Falcon gave us a trend change signal right here. Okay, I'm too far away from this counter trend signal now to take advantage of it, but we should see a cloud crossover signal. That will be our #1 signal here on the Raptor. So the cloud's just beginning to cross. Oh, we got our first micro-macro cross in the hawk here as well. Doggone it, I'm missing all my signals this morning. Okay, we're getting closer now. We've got a macro pullback signal here in the hawk that I'm going to try to take advantage of. I hope that keeps me far enough away. Actually, I don't feel like going 2 contracts here at this moment. We'll redo this. There we go. Just take a single, and I'll try to run that out if I get filled on the short side. And then here on the Raptor, the clouds are starting to cross. We're getting that pullback into the clouds. Looking for the cloud now to push the market back out to resume the downtrend. Jack is asking, is the simplest method to just take the 3 Raptor signals? Short answer, Jack, yes. Now, you want to keep an eye on the context as well, and what I mean by that is the left side of your chart. You can't totally ignore that. Too many people trade this way. You know, they follow these last few bars, and they think that's all they need to do is pay attention to the last 3 or 4 bars, and they ignore everything that came before. You have to have a feel for what the market might be doing. So for instance, looking at this chart, the market seems to have been in a little bit of an uptrend, after which time it went sideways. I think that's fairly obvious. And then it tried to resume the trend again, the uptrend, and it failed to do so. Right? That kind of, the context is right now it's saying this market is going to be more inclined to head lower than head higher. How can I say that? Well, the buyers tried to head higher, didn't they? They tried to head higher here, couldn't do it. Tried to head higher here, couldn't do it. They're trying to head higher again here. If they fail one more time and the market starts coming down, then the market will probably continue lower. And that will produce our number 1 signal. So if you happen to be following through the overnight and you're getting, or even if this were happening during the day, the time doesn't really matter, but you're getting, you know, a continuation signal, a hard edge bounce. Okay, that's fine. That's all well and good. We've got an uptrend. A continuation signal makes sense. Follow with another continuation signal. Okay, now all of a sudden we get counter trend signals and continuation signals. I would not be reversing back and forth, taking different signals here. Counter trend signals, you always need to be leery of counter trend signals. You know, it's a high probability signal. It did work out, but you would have had to keep your stop a little bit further away. With counter trend, you always want to keep your stops above the last swing high or low, as the case may be, because you may have to hold on to it for a little while before it actually works out. The with trend signal also worked out. So here's our number 3 signal, the continuation signal. And here too, you know, you've got to keep your stops a little bit away in case you hit one of these sideways markets, but there you go, you hit your profit objective before the market starts to unwind. So both signals worked if you gave them the opportunity to work. All right, so it looks like the market not in a selling mood here at the moment, so I'm going to scrub that order. Suppose this would be our first in sync eagle signal here this morning. This guy right here, it's a hard edge bounce, a red bar buy. Yes, I know we fudged the hard edge by quite a bit. It is still a hard edge bounce. Still that reaction to the hard edge, even though it fudged it quite a bit. that early bear move now getting reversed, and we're up here against the primary resistance. Looking for a possible buy. All right, so what I'm looking at now is a possible cloud crossover to the upside, maybe a retreat and a hard edge bounce. Yeah, Tony says, looks like the 6E did not like the election. Neither did the British pound. I was a little disappointed. I was looking to short the pound and jumped right over my order. Stinkers. Could have made a lot of money on the British election, the UK election. All right, we're starting to top out again. I'm wondering whether this is going to turn into a little bit of a double top type idea. So here's the high of the morning. We're flinching here at 58.93. Okay, right back into the hard edge. We'll see if we get a reaction here now. A little bit of a mess for a market that's supposed to be more in trend mode this morning. Here the hawk now drifting into yellow bars, so we can ignore that. It's almost like it's going to be one of these trades where we just pick a direction and hang on. I might even be more inclined to the short side this morning. I don't know, some days it just seems easier. All right, you, we may, you might interpret this sell signal here as a larger number two type soft edge sell. I was reading some of the results about the British election. And we're going to get a red bar buy, so we're looking at a rather constipated market here at the moment. All right, I'm going to look at taking a second push on this bad boy right here. So what I'm looking at, the market obviously sideways. We're seeing tests of the extreme, in this case the extreme is the high, and subsequent failures. Oh, and now we're getting a rally again. Wow. Okay, it's going to tip here soon. We just got to hang on a little bit longer. So what I've done is I'm looking at trading this signal right here, but I'm allowing for a second push entry opportunity. And we're actually going to get a buy signal here now. This is going to be our hard edge bounce. And so we're going to have a second push opportunity here too. Maybe I'll do an OCO order. So I'll buy above there, sell below here. Now when you do an OCO order, you need to remember that these orders are live the moment you put them on your chart. Let's see, we'll go with maybe a pair. I don't want my stop right there, not yet. There we go. So this is essentially a hard edge bounce as well. It didn't print as a number 3 signal because our cloud is a little bit messed up. And I'm going to keep my stop fairly cozy, I think. There we go. Because there could be some resistance here. There's going to be some support down here. It's essentially like a sideways wedge that we're seeing the market produce. All right, we're far enough along here. I'm going to force the trade to break even at this point just because of the sideways nature of the market. Stinkers. Well, it was worth a try. And I suppose in hindsight, I could have scalped out with my open profit. There was enough in there for a scalp. Yeah, see here we had the red bar buy signal producing about the same time. That gave us a nice little scalp to the upside. The hawk or the raptor producing a bunch of yellow bars also. It borrows that from the hawk programming. I suppose this is another OCO type situation. If you wanted, you could kind of bracket the current range. So we have a low here, we have a high here, the last swing high. Remember, whoever controls the last swing controls the market. So if this swing fails, we should see the market rally. If this swing fails, we should see the market fall. Now, when you do your OCO orders, it's a good idea to keep your stops enabled. You can see we're getting a cloud crossover signal forming, so that will be our number one buy signal. Daniel's asking, is there a difference in the June and September NASDAQ markets? Here, okay, after this trade, I'll show it to you again. Okay, so long at 58.91, got to stop at 58.84. Try to run it out. All right, while we're letting this trade sort itself out, let me pull up the NASDAQ again. All right, so here now, the NASDAQ, the June contract trading 56, just shy of 57,000 contracts. September trading 75,000. So the volume is up on September, but the open interest is still bigger on June. So they're pretty much even up. You know, the higher open interest in June is favorable, but you know, 58,000 contracts open interest, that's huge in September as well. You don't need to worry about rolling if you don't want. The June contract doesn't expire until next week. There's still plenty of volume and liquidity if you're trading June. Okay, right now I got to get over this hump though at the primary resistance line. 58.93 is a little bit of a stumbling block. Come on, so close. Just get over that hurdle. All right, here we'll give them a little push with the mouse. Just get up there, give it a little nudge. Come on, get over the line. Get up there. Certainly don't want this turning into a triple top. That would be bad. I can tell you from the length of time it's taking this bar to complete that we're going to see a lot of volume go through on this bar. This is going to be a very influential bar for us. If it can trade on the other side of 53.93, we're going to start tagging some of these sell orders or these stop losses for these sellers that are here. And some of the sellers that may have rolled their stops in, a little bit early here to break even, or maybe even to capture a little bit of profit, it could result in a little bit of an uptick here. There we go. There's 93.5. I might move into a more aggressive stop, maybe use my parabolics now. Come on, where's that follow through? Get up there. One more bar. There we go. There's 94. 94.5, obviously the high of the morning. There's going to be a little bit of resistance there. Doggone it. Turn around, you stinkers, you. There we go. If I can get this bar to finish higher, I'm going to, there we go. We'll take the stops to break even on the next tap at 58.94. Come on. You can do it. Oh. There we go. There's 93.5, 3/4. Oh, there we go. Hit 94. Okay, so we've got a break-even trade now. And they should try to break the high of the morning. There they go. So there's 95. Now we're going to see some of these early sellers, or these people that sold off of the open. If they haven't taken profit already, if they're still holding on to their position, they're going to be looking to exit as they get trapped out of their trades. Daniel's asking, could you look at this as a reverse head and shoulders? Yes, absolutely you could. So here's one shoulder. Here's the head. Here's the other shoulder. There's your signal line. And what a lot of traders will do on a head and shoulders formation, they'll let the market come down here, retest the line and look for the bounce. And then look to buy. How are we doing for open profit? Yeah, we would have just hit our high probability target up here, where the market is turning off of the high. With a little bit of luck, we'll see the buyers press this bar. Again, another important bar for us. Want to see this bar finish strong. That'll give us a little bit of breathing room from our stops. Good morning. Prashanthan is asking, good morning, Eric. Are the contracts not rolling over? 1 second here. I should leave this window open because I can see I'm going to get asked this question a lot. I have no idea why NinjaTrader prompts everybody to roll so early. I always used to hold the June contract almost until the day before expiration. Here's the June NASDAQ. We're trading 65,000 contracts. September is trading 86,000, so September trading a little bit higher volume today. But the open interest on the June contract is still higher. I'm going to roll at the end of the day because if I don't, I can just see Monday, Tuesday next week, everybody will just be asking me about why am I still trading the June contract. But there's plenty of volume in June. It doesn't matter if you're in September, that's fine. The setups will be the same. Come on, let's go. What are we doing here now? We're just over our high probability target. All right, maybe I'll be a little bit more aggressive here. I don't like the fact that they're recovering so quickly after breaking the high. Normally, if we break a substantial high like this, we see a little bit of follow through. 58.98, also the overnight high from the day before. Paul says, I'm confused. My NASDAQ chart is at 58.04 in the September contract. All right, folks, as soon as this position closes out, I will roll my contract. Oh, dear. Fred's asking if you could show me how to reverse position at stop on Trade Manager, and is it possible to increase position size at a reversal? Thanks. Okay, the very, very early version of Trade Manager had a reverse button. They've deleted it over time just to free up some screen real estate. Because what a reverse button, essentially it's the same as tapping your buy and sell market buttons. So let's say I'm long this trade and I was looking to reverse the other direction. If you wanted to reverse immediately on your position, because I'm long one contract, the simplest way to do it on Trade Manager is just to hit the sell market button twice. The first tap will close out your long position. The second tap will initiate a new short. If you want to increase your position size on the reversal, you could go here into manual mode, and if you wanted to do it all with one click, I suppose you could just change your quantity to 3, hit the sell button once, the first contract will offset your long position, and the other 2 contracts will be your new short position. I know it can be a little bit confusing, but that's the simplest way to do it. Reversing on trades is tricky because there's a reason the market waffles back and forth like this, and part of it is traders reversing on their earlier positions. Just when the market looks bullish, they'll buy in and then all of a sudden it'll head down. Then, oh, it looks really bearish, so we'll sell it, and then it goes up. I'm not a big fan of reversals. I've gotten into some big trouble in the past on reversals, especially double down reversals, averaging down, whatever you want to call it. But that would be the simplest way to do it, Fred, is just to use your buy and sell market buttons. Your window will always tell you how many positions you have as well. So if you tap the sell button once, it would go flat. If you tap it again, it would say short 1, tap it again, it would say short 2, and so on and so forth. I know, it's not the ideal solution, but one day you may thank me that it's not so easy to reverse on your trades. All right, let me roll over into the September contract. This will be a good time to show you. If you haven't figured this out already, here's an easy way to roll your contract months. So you can just click on your instrument of choice, hit the button that moves it back into the panel, and then it will give you the current contract month. And then you can just click it back. So you can just go back and forth like this. I think I've actually got a trade going in the euro. Yes, I do. And this way, you can just go through your chart and you can be sure that you'll have the current month for everything that you're trading. Okay, when you've made those changes, and now we're going to roll into the, where are you, NASDAQ? Here we go. Not very good at multitasking. Okay, so when you've made your changes, do yourself a favor, save it. And I always like to keep a duplicate workspace in case something, my original becomes corrupted. Oh, look at that. It looks almost like the June contract. To be fair, though, we did produce a better signal here. We got the #1 cloud crossover signal. We got the hard edge bounce signal. On the June contract, the cloud was interfering more with these, so the signal wasn't quite as clear. There now, everybody will be happy. I don't know if we're going to see a bit of a pullback here. Maybe back into the hard edge. There's no denying the market is bullish. I would favor buying opportunities. But then you also need to wonder, was this the last kick of the can? Yeah, Tony says Ninja just sent him a thank you note for rolling over into September. There, like I said, there's plenty of liquidity in the stock market. You could even trade it up until next Wednesday, the June contract, without worrying too much about slippage. Well, what I suspect might happen is that we might see a little bit of another double top here, another little bit of a failure. Again, the market is in an uptrend, but the lack of follow through is making me wonder. Well, we're just kind of hanging out here. Nothing new to comment on. Put that back on the shelf for now. Kind of hit the sideways skids here for the moment. Well, I wonder if that's it. If we've seen the move of the day, a little bit of a move down and a recovery up. Ideally, what would happen is we're going to see a little bit of a bump up here. I don't think it's going to be very pronounced. I think it's going to be subtle, but it will be enough to test the extreme. If the market rolls over on itself then and gives us a sell signal, that would be a good soft edge sell to try to short at least back here to the hard edge. The market may even go lower, might even get down here to the median line. Oh, Paul says the YM made a nice 50-tick move. Yeah, the market is really getting kind of slow here. We'll stay with it for another 5 minutes. Otherwise, I think we're going to button up shop. Well, boys and girls, I think we're going to close up shop here. If you are going to hang out and try to trade the remainder of the morning session and through the afternoon, I think what you want to be on the lookout for here is a test of the extreme. I think we might see just a little uptick. We might even get to be that high, and then look for the market to fold over on itself. I don't think it's going to be a monster move lower, but certainly a move back here to the hard edge feasible. Certainly enough to get your high probability profit objective. There is a chance that it could drift a little bit lower still, but I would not get too crazy on the short side, at least not until I get that test of the extreme. All right, gang. I will see you on Monday. Have yourselves a very nice weekend. We'll talk to you then. Bye for now.